What's up, fam? No whiteboard today. It's time to panic. We just went to zero on Bitcoin. The CPI data came out right here. I don't know if you can tell where the inflation data came out, and then boom, right down. Something is going to break, guys. So the inflation expectations were 8.1%. We came in at 8.2, and 6.4%. We came in at 6.6. Everyone panic, and that's what everyone did. Everyone panicked. The stock market crashed. Bitcoin. Look at that stock market candle. We live in this made-up world, and so in this video, I'm going to show you what I expect to happen next. All the dominoes that are going to fall from this. I've been talking about this for weeks, why this is, this morning was the biggest data point, and now everything is going to break and how it's going to end up playing out. So if you're interested in that, smash the like button for me. I'm starting to make more shorter content here, short form content, but on this video, it's very, very important, guys, on the CPI data, on the big videos every day. If you could just do me a huge favor, it takes 2 seconds, and I know a lot of you guys are, so thank you so much. Look at this, 941. Thank you so much, guys, for liking. If you could just take 2 seconds and smash the like button, share this with someone if you get any value out of this, because I'm making videos every single day in 2 languages. So go watch in Spanish as well every single day. The thumbnails in Spanish will be green for now, and they'll be blue on the English channel, but go watch, guys. Go watch. And also, I'm making so much content. I also started a TikTok today, so go follow me at KaleAbe, Kale_Abe, on TikTok, and you'll get the fastest market updates. So guys, I don't make any money off this stuff, so please do me a favor and smash the like button so I can stay motivated to do this crap. But anyway, we had a giant nuke, stock market, Bitcoin. The inflation data came in like barely over expectations, and everyone's panicking. Here is why I cannot sell my Bitcoin right now, okay? Here is why we already know how this is going to play out, okay? So first and foremost, I've been talking about this for weeks, how the Fed is starting to come under pressure from central banks because of the bond markets. So the best example is this right here. Where is it right here? This idiot right here telling pension funds that they have 3 days to rebalance. But then a couple minutes later, he was like, you know what? We're probably just going to keep printing money. So basically, for all you normal people, this guy is basically the Jerome Powell of England. Jerome Powell is the guy who controls the money printer in the United States, right? This guy controls the money printer in England. And what he had to do is bail out the pension funds, the bond market, because the Fed is raising rates too high. So I want to connect the dots for you guys, because it is kind of complicated, and no one really did this for me when I was learning. So let me just connect the dots for you, okay? So what happened today? Let me just draw. I'll just make it very, very simple. Inflation came in too high, okay? We got inflation up here. I wish I could draw inflation. Oh my gosh. I'm going to put this on a daily chart so that I can actually draw on this chart. Give me 2 seconds, okay? Inflation. Inflation came in too hot. Now, what does this mean? And we want to know the domino effects, right? So the domino effects are, number one, that the bond market, the bond yields, bonds go up. Bond yields go up. And if you don't believe me, let me just go pull up a bond yield chart. So a bond yield is like a US 10-year chart. Look at this. See how it's going up? US 10-year, US 2-year. Look at that candle today. Look at that huge candle today. This is the bond market, by the way. When you see an asset that is worth $100 trillion, okay? These are $100 trillion markets. These are bigger than the stock market, bigger than the housing market. These are massive markets. And when you see candles like this, when you see price action like this that resembles Dogecoin from 2021, it's time to start paying attention, okay? And you have the same thing on the dollar price index, the DXY. Look at this. The DXY after the data today went like this. So you have currencies and bond markets going absolutely insane. So let's go back to the chart I was on. Where was I? I was on BTC, or I was on ES. I was writing here. Okay, hold on a second. Sorry. I want to get this out quick, so this might be a little bit messy today. I apologize. Give me 2 seconds. Okay, so you have inflations, you have bond yields going up, you have the dollar going up, okay, DXY going up. And the reason for this, guys, and you have to understand the reason for this. The reason for the bond yields going up and the DXY going up is because inflation went up. But you're thinking, oh, I don't understand. If inflation goes up, people expect, I'm going to put expect right here, okay? The Fed to raise rates. The Fed to raise rates. Okay, and when the Fed raises rates, I'm going to write rates here so you guys know. When the Fed raises rates, it makes the cost of everything more expensive. It makes bonds more expensive. It makes the dollar more expensive. And what this does is it puts giant pressure on the economy. Okay, this puts giant pressure on everyone else in the world, and stuff starts to break. So we already broke the Bank of England, which I showed you right here. We already broke the Bank of England. The next one that is up that I called, I don't know, like 10 days ago in one of my videos. Go watch, which video is it? I literally talked about this in detail in one of these videos. I think it's this one, Europe in Deep Trouble. In this video right here, I talk about how the German market is, it's just me and my talking about how the market, we broke the Bank of England, Now the Bank of Europe is next. The German bank, the German central bank is next on the chopping block, and the dollar is getting too strong. The bond market is getting too strong, like I was showing you here. These things are too, gosh dang it. I hate TradingView. I should find a different place to draw. I'm going to find a better place to draw for the future, but can you see this? The bond market and the DXY and everything going up too much is going to break Germany next. So what that means, I'm just going to draw this out here, and then I'm not going to move it again, I promise. The next thing, okay, so we have the Bank of Japan has already been broken. Okay, we already know this. They've been broken. The Bank of England, they're dead. Bank of England is dead. They're already printing money. Okay, Bank of Australia is already printing money. Okay, they're already printing money right here. Next up on the chopping block is the Bank of Europe, the ECB. They are going to capitulate, and they're going to start printing money next. So what this means is that 80% of central banks in the world, 80% will be printing money, PM. They're going to be printing money in the next month or two, and they're not going to have a choice because the bond market is too strong, the DXY is too strong, okay? Does that make sense? I'm trying to make this simple for you guys and do it fast. You can go get more information from this. Go watch. If you want more information, go Europe in Deep Trouble. It's on my channel. Okay, so that is what's going to happen next. You're going to have 80% of the world printing money, and you're going to have the Federal Reserve. You're going to have our government, the U.S., the dollar, the strong government, not printing money. PM down. Okay, so what does this mean? What does this mean? This means that something is going to break. Very, very simply put, okay? You cannot have 80% of the country printing and the most important country, the Federal Reserve, not printing without something breaking. And the things that will break are the currencies, as you can see here. Let me show you the Great British Pound. The Great British Pound, straight down. The Euro, straight down against the dollar. Okay, you're gonna have the currencies break, and you're gonna have the bond markets break. I don't have like the Japanese bond market up here or the European bond markets up here. I have one. I have a tweet, I think. Look at this. The British bond market is down 52% this year. Okay, so when you have stuff like this breaking, guys, and I don't want to take too much time on this video, follow me on TikTok and smash the like button and all that stuff for quicker updates. But guys, when stuff breaks, what ends up happening is that the Fed has to end up printing the money. And I have a trump card in my pocket too, because I know inflation came in under expectations today. Okay, it came in over expectations. Inflation is going to scare everyone. However, if you follow smart people on Twitter like I do, like Pentoshi, he just tweeted today how he thinks that this was probably the exact top of inflation because just go read his thread. I don't want to explain this to you, but basically he's saying that each print that comes out is compared to the one a year before, right? So the one today was 8.2%. The reason it was 8.2% is it was compared to this exact month last year. Does that make sense? And so we're actually having some of the biggest months, the craziest months fall off from last year. So the next prints, logically, just using mathematics, are going to come down. He's saying we are seeing rates near their peak velocity, and we're also seeing inflation. Following the next months, the prints we're seeing welcome progress. In addition, we've seen the World Food Index decline for 6 months straight. I don't expect CPI goes down in a straight line. It will take time, but I do expect it to drop significantly lower over the next few months. This guy is one of the best traders on the planet, okay? So we know inflation is going to come down. We know that something is probably going to break in the bond market and the Fed is going to have to print money. So we know the end of this story. I've been saying this for months and nothing changes, guys. If you own Bitcoin, you are able to hedge all of this stuff. You're able to hedge currency risk. You have these currencies that are blowing up left and right. You're able to hedge money printing risk because these people have an unlimited money printer and they will turn it back on, and Bitcoin is the best bet for that. You know they're going to turn it back on, so why wouldn't you just hold the thing that is going to benefit from that? And finally, you know inflation is going to come down, which is also going to let them print money in the future. It's just a matter of time. So don't use leverage. Hold your coins. Be strong. Be tough. Share this with someone who it can help, because I know it hurts me. It hurts me, guys, that people are getting out of crypto right now when now is the time to pay attention. Now is the time to actually focus and tell your family about it. Not when Bitcoin was 69,000. Now. So follow me on all the platforms, smash this like button, and share this with someone. Love you guys. Bye.